Joining us now, Sarat Sethi, managing partner and portfolio manager at DCLA. He's also a CNBC contributor. I think just trying to distill down what you're thinking, Sarat. I think the base case now is higher for longer, but what we don't know is higher than we are right now for longer or where we are right now for longer. We still don't know. We could go a point or two, theoretically, 100 or 200 basis points higher before this is all said and done, depending on inflation and how strong the economy is.
Yeah, and I think that's what's causing a lot of this volatility, Joe, because the market's trying to figure out where we're going to go. And when it doesn't know where we're going to go, the first thing it does is sell. So you see that in interest rates, you see that in the volatility of interest rates, and then you add to it the uncertainty of other things going on, such as oil prices, the dollar getting stronger. And then, just because we don't have a government shutdown, it just means we kick the can down the road. And you could say the same thing about interest rates. So you add all that, it's a very powerful cocktail to say, hey, you know what? Why should I actually, in the short term, kind of be invested in the market when I can get 5.5%, 6% just sitting in treasuries? So I think shorter term, there's potential for much more volatility, but longer term, when this thing settles out, what we're seeing is a huge valuation disparity between the big seven and now the rest of the market. It's getting bigger and bigger.
Well, I wish we knew exactly what dictates further rate hikes, Sarat. If it was just inflation, that would make sense to me. You want to keep going up until you conquer inflation. But it almost seems like as long as the economy holds up, the Fed thinks that it needs to go higher. It's almost like a catch-22. To accomplish their goal, which is slowing the economy, they need to keep raising. And it hasn't happened. That's why the rates are going up now. Every strong economic number we get causes rates to tick higher with the notion that the Fed's not finished. Not whether inflation is strong.
Right. It's growthless. So we're back to the now good news is bad news, right? Because if you get strong economic data, it means the Fed is not going to take their foot off the accelerator. And that means higher interest rates, higher capital costs, and also for balance sheets that are weak to get even weaker. I think what we have to do is wait for the lag, right? And that's the hardest thing, to be patient, because they've started this months ago. And you are seeing some economic data that's coming in that's not as robust as it was before, but it's a timing issue. And then, Joe, we're going to go to the flip side and say, oh, God, things are getting weaker when they start doing. And then what is the bottom, especially when you see pre-announcements coming? And whether that comes in advertising or it comes in labor or it comes in input costs. And look, at the same time, you have commodity prices rising, too. So I do think sticking with really solid companies, balance sheets are really going to be important. And I think having a diversified portfolio in a time like this is even more important than just saying sticking with the winners. And I'll go back to the big seven. If we do get a slowdown, the big seven are not going to survive with the valuations they have, even though their balance sheets are strong.
Would you be playing stocks that would companies that would do well in a recession? I mean, are you starting to factor that in? So you're buying more defensive issues? I mean, we pointed out that the Russell's down, that economically sensitive stocks have not been doing as well. Are they values now, or do you avoid them?
No, I think you have to look and say specifically, are you buying secular or are you buying kind of companies that are going to do well in a downturn? But I do think there's opportunities in healthcare and staples, companies like Haleon, that will do well no matter what happens in the environment. Or you look at some of the utilities that are just being sold off because interest rates are going up. And at some point when that stabilizes, these companies still have core pricing. So, a company like AES that's down, 15% just in the last 6 weeks. So there are going to be opportunities. You just kind of have to hold your nose right now, because as we get this interest rate volatility, markets are not going to actually give anyone credit. And I think you'll be better off when we come through it. Timing, as we were talking about, Joe, is it 1 month, 3 months? We're going to get the talk of, oh, God, now we're going to go to stagflation. How's the rest of the world going to do this? But I think you're going to see some of that happen. And I would say put money to work in some of these beaten down stocks and sectors, because you want to do this when they're out of favor, not when, hey, now we're in a slowdown. These are the stocks to go to.
It's October something. What did I say this morning? Second, third? What is it?
It's the third.
It's the third. I mean, the teens, the Ides of October And it wouldn't be surprising, given that we've been in a pretty sustained consolidation, whatever you want to call it, since the first week of August, Sarat. Do you think there's a buying opportunity coming up in the next 2 weeks? I know you're not a tops down guy, but do you think that it's going to be another one of those Octobers? The Dow, it's up in the morning, it's all down almost every day, it seems like.
It started off strong yesterday. Could we get that crescendo, that kind of October that we normally get? Probably. We also are going into tax lot selling season. So you're going to get a lot of window dressing. You're going to get investors, especially professional investors, looking at stocks that were down for the year, so either selling out, doubling up. So you add that to the mix, and absolutely, I think this is where you say, hey, where are some good quality companies that have been sold off? I'm going to pick them up because other managers are doubling up, selling off. And yeah, we do get into this year end. Again, we talked about, we don't know if the government's going to shut down. We don't know where rates are going to go. Oil seems to be going higher, interest rates going higher, and we have global uncertainty. So opportunities, absolutely, but you have to have a strong stomach for it.
All right.